Hello friends, this is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Next Week, where we look at a weekly stock market analysis on what happened during the last weekend. We would also look at how we can plan for a better trade next week. First of all, Happy New Year to all. And remember, this is analysis for January 3rd, Monday 2022, the first trading day of next year. So if you're not subscribed, please subscribe and share it to your friends and colleagues so that it benefits all of us. Thank you so much. So without wasting time, let's get deep dive. Look at the candle of the last week. It's a wide range bullish candle for sure on the Nifty that you see on the left side, and then it's a wide range bullish candle that you see on the Nifty Bank also on the right side. Right, let's deep dive. So it was 2% further move. We had a bounce that happened previous week. We had a bounce that happened. It formed some kind of a hammer pattern, which indicated that it could further move or it could reverse to the upside. And that's exactly what happened. 2% up move, wide range bullish candle, right? And Bank Nifty nearly 2% up move. And main thing is it closed a window gap that was there for almost 9 days, and it formed a wide range. So there is a gap here. On the daily, if you see, 1, 2, 3, 4, 5, 6, 7, almost 10 days this gap was unfilled, and yesterday on the previous day of the last trading day of Friday, it closed that gap, which is definitely bullish. And that is only day where it actually performed. If you see, it performed 3-4 days before the green candle, and after that it was all small bodies or indices or bearishness, and then finally it clearly indicated that it is taking some time, but it has closed the gap and it's planning to move ahead. So that was a weekly candle that we looked at, and the Nifty daily candle, if you see, it was a 1% close, right? And that closed the highest in the last previous days, and it also formed an opening with a high pattern. What is that? So this is a daily candle. Opening with high is the opening price remained almost the same as the low of the candle. Right, so which is bullish indicator. So it looks like a actual candle. Here also you can say the opening is low kind of pattern is that indicates further bullishness that you can see. That's a daily that you saw. And Bank Nifty also formed the opening low candle, but it was making a 1% move on a single day. 1% move on a single day, right? So that's what we are seeing. So overall, and you can see that it closed the highest in the last 10 days. Bank Nifty also closed highest in the last 10 days. Now Bollinger Bands is something different. It's clearly indicating the sideways on the upper and the lower band, which says consolidation is there ahead, right? And above the support of the moving average or median of the Bollinger indicates it is heading up for sure. Bank Nifty, the volatility is expanding on the bearish side and indicating further bearishness, but in the last days that single move have made a small bend here, indication probably there could be a sideways move from here, but we cannot be sure because it is still below the moving average median band of the Bollinger. So Bank Nifty not very encouraging yet, right, from the Bollinger Bands and volatility expansion, but Nifty is definitely showing there is a consolidation that could extend for small period, long period, never know that, right? But definitely it's consolidation, and Bank Nifty may follow. That's what we can say right now. But a clear bend of this side to the sideways is seen on the upper band, but not on the lower band. What else do we see? Yeah, so this is a levels. This is a Bank Nifty levels. You can see that we are at a exactly hitting the top of a resistance zone and exactly at the bottom of a support zone on the Nifty, right? Here also Bank Nifty, you can see that we are at a bottom and the top of a support and resistance zone. This is the gap that was in between, and the gap is filled now. Let's look at the levels. 17,200 to 17,300 is the first support that the Nifty has if it breaks down from the current levels, right, which is somewhere about 350. 7350. So 7200, 300 would be a good support zone. 17,000 and 750 is the previous swing low, which is also a good support zone. After that, 16,700, which is a Fibonacci retracement level of 38, is also a good zone. And then below that, you have 16,700, 750. Now resistance upside is 17,350 to 17,450, right? The first resistance, and then 17,500 to 17,600, and above that you have the resistance at 17,800 to 17,50. The 17,500 to 17,600 is very crucial because it will break the swing high and then it will indicate that the rally is going to continue. Anything below that, it may be consolidation or bearishness. Bank Nifty, if you see, the highest probability support level immediately below is 35,000, which is a rounding number, and 35,000 and 35,300, that level. Remember that right now it is around 35,000 above, not 35,500, that level. So the support below, if it breaks, is that 35,000, and if that breaks from there, 34,350 to 34,450 level is also a Fibonacci 61 retracement level, and that also breaks means it goes back to the 34,100 levels. 34,000, which is also a rounding number there. Now resistance upside 35,600 to 35,900 would be the first place where the resistance is seen on the Bank Nifty, right? This zone, and above that you have 36,300 to 36,600, which is a Fibonacci 50 resistance level, right? And so that is how it is. And above that you have the resistance at 36,900 to 37,100. So 36,900 to 37,100, and after that you have 37,300 and 37,400. So this is a crucial zone. This is a zone that is crucial, just like 17,600 is a crucial zone for Bank Nifty. Bank Nifty 37,400, 500, that range is the place where the swing highs will be taken away, and then it will further proceed. So that's quite far from the current rate, nearly 2,000 points, but the Bank Nifty is closer, 350 points. So that's the levels. This is a wrap up of the same thing, from a different chart. Same Nifty on the left side, Bank Nifty on the right side. So you can see that it is a channel, swing high, swing low, that is happening. Lower low, lower high is happening. Now it is at a point where it is heading towards breaking out and taking out the 17,600 levels, right? And the Bollinger Bands are clearly sideways, so it's in a channel. So then breakout has happened today. Bank Nifty is still below the moving average, and then you have the swing low, which is quite high. So but make a note that momentum has picked up. Momentum was already sideways. Here momentum was bearish, now it is picked up into the sideways. That's what it is. Momentum, if you see, it is sideways on the daily, you saw that, right? And the weekly also it is sideways, right? And we are talking about Nifty. Monthly also, monthly is bullish, actually it's not sideways. So daily and weekly is bullish on Nifty. Bank Nifty, it is sideways momentum on the daily and the weekly, but monthly, the thing is, the monthly is a problem. Monthly means it's long term. Bank Nifty has slipped, right? It has slightly slipped from the bullish zones. It has gone slightly slipped in the sideways zones. That's what you see on the monthly. But Bank Nifty monthly is very much bullish. Bank Nifty also has got a 4-bar bullish momentum reverse divergence, which is still in progress. Bank Nifty on the monthly. Now Nifty and Bank Nifty, both of them has got a very wide 15-bar kind of bullish reverse divergence, which is work in progress on the daily, short term, both of that. The target is yet to be met, but it is clearly work in progress. If it is to meet the target, it will go and hit the 17,500, 600 levels, and if it is similarly, it is going to hit the 37,000 levels if the target of this. Both are work in progress and beautifully working this reverse divergence on the short term. In addition to that, Nifty has got a monthly divergence also, bullish as well. Now momentum, if you see short term, Nifty, you can see it sideways, you can see clearly it is sideways. Here, the last Friday's move made it into the sideways on the BS zones on the Bank Nifty on the right side. So that's the momentum trend. If you see, it's crossed over, Nifty has crossed over to the pull zones. The DMI positives now all just crossed over. DMI positive is dominated. So that's going to the bull zones. But Nifty, Bank Nifty is still to do that. It is yet to cross over that. So it still remains in a bearish zones. You can see the trend is yet to change in the Bank Nifty is the indication. Now coming back to the opportunity analysis and the volatility analysis. This is VIX. What is happening in the VIX? India VIX is dropped, right? So slight drop of 5%. Some drop in the VIX has happened. 5% of drop in the VIX has happened. I'm settled at 16.2, and the volatility is, you can say, still at the lower range. From 15 to 16 is not too much. So there's a chance that it can either fall to 15, cool off, giving space for the Nifty to move up further, and later or right away, catch up the momentum and then move to the 20 zones also. Anything about 20, you have to be cautious. So that's the India VIX level. But volatility, implied volatility, if you see 15.76 is what Nifty is there, which is above the HIV. And the IVP also has dropped from 70, kind of 55, 70, that range to 42. IVP has cooled off, definitely. So there is a cool off in the VIX, and in general, the volatility has cooled off. That is why we have a sideways on. Now, open interest analysis for the January 6th weekly expiry shows that 18,000 and 18,500 has got highest put rating. 18,500 having high put rate means it's pure bullishness. People are thinking that easily the market can go up to 18,000 the next week. This is hardly in 1 week it can go to 18,000 is what people believe. Sellers basically, which is bullish, indicating there is bullishness in the market. And 17,300 is where the highest put rating can be seen, and then after that 17,200 is where the highest put rating. So that means gone is a 17,000 support, and now it is upgraded itself to 17,200, 300 that level. That is also indicated as well. So overall, you can see that in the Bank Nifty 35,500 and 36,000 is where the highest resistance can be seen, right? Bank Nifty is not showing that much bullishness as in Nifty, right? 35,500 and 36,000 is not quite far, right? Not too far, we can say, from the current 35,500 kind of level. So 35,000 is having good support, right? And 34,000 also is having good amount of put rating for the January 6th weekly expiry. So put call ratio is also bullish, very much in 1.26. Put call ratio is bullish in Nifty, and 9.7 is also kind of bullish in the Bank Nifty. You can see that both the futures open interest rate is showing it is short covering that is happening in the Nifty and the Bank. That means people who have gone short earlier previous weeks suddenly have turned back to being bullish. So that can be very powerful. The market can easily go up for the next week is what it indicates. So that's about the open interest data and the volatility. This is exactly what we talked about the open interest. You can see that it is there is huge resistance out here. 18,000 is quite far from where it is right now. But overall, if you see, a lot of put addition has happened, and then put support seems to be having good volumes, good number of contracts basically. So Bank Nifty also, you can see that the puts are dominating, which is which is also indicative of not bearishness anyway. Right? So we have already seen that. Now coming to a sectorial watch, what had happened last week? So the two sectors are very bullish. What is IT sector and second is pharma sector. 2.5% of up move has happened last week. Pharma 5.5% of up move. Right. The thing is, IT is formed a doji, which is something to be cautious. Whenever doji is there could be indication of a reversal, or it could be either side. It's indecisive basically. So the thing to keep in mind is that IT can run enough, and the short and the medium term momentum is also bullish. So it is time to cautiously pick up the stock. Pharma, the thing is, weekly has not caught up yet to the bullish zones, but definitely daily is in the up, has gone with momentum bullishness. So you can cautiously pick stocks, but ideally it makes sense to wait for the weekly also to catch up. Alright, if you're doing positional, but yeah, but for swing trades, probably having a short term momentum is enough for the picking up the stocks. But other sectors, if you see FMCG, metal, all of this, FMCG is 2% up, metal is also up 1%, auto sector is 3% up, reality is also around 2% up. So everything is up from the price action point of view last week. But the momentum is all sideways on the short term for all of the other sectors other than IT and the pharma. So that is something we have to stay away until that catches up in the momentum, right? That's the sectorial view. Now, institutional participation, if you see, the selling has reduced to 2,200 crores finally. We were talking about 9,000, 7,000 kind of crores of selling in cash every week. Now, it is reduced probably because of vacation or something else. But it is reduced, and DIS, as usual, has bought in cash 4,275 crores, and it is much more than what they sold. Basically, market is up in greens, right? So what you see up here is the Fyers selling, and this is the buying of the DIs that you can see for the last 1 month. Now net longs on the derivatives on FIA and DI side also has moved up last week if you see. Now looking at the global markets, what happened? The market is closed green on S&P and Dow Jones. Nasdaq was slightly down, flat. You can say it's forming a gravestone doji kind of pattern, which is probably indication of a slowdown, consolidation, or a bearishness. But otherwise, markets have bounced up last week, further 1% almost nearly, right? But the dollar index has weakened. Dollar had weakened 0.5%. After it had taken out two major resistance zones, you can see that it has been consolidation in the last several weeks, and it turned bearish last week. Almost 5%, 0.5% of drop has happened, and then it is settled at 95.6% levels. Now USD INR currency pair, the INR has strengthened with the 1% drop, and previous week's 1.2%. So total, more than 2.5 rupees of drop has happened in the economy. That strengthened the economy, strengthened the rupee, Indian rupee as compared to the US. Yeah. Crude oil has on the contrary has shot up 2% up and it's 75. Remember it was 10 rupees down at 65 few weeks back, 4 weeks back. After that was a big cool off, and now it is spiking back towards the resistance zone once again. Now anything above that will be dangerous, right? Back to the 80 levels it will go. So I hope it gets some resistance at this zone of 75 and then drops back. Otherwise it's not good for our economy, Indian economy, right? The gold has seen a spike. Okay, the weekly cup and holder pattern, and it has been consolidating at this zone for a long time. This is a weekly time frame. Now we have spike, and it is at the previous resistance zone. You can see that single black line, which is a resistance zone 1829. If it breaks on that, it will be another attempt on the next resistance zone on the upside 1876. Anything above that would be a big breakout that can happen. So momentum on the weekly is yet to catch up in full swing. It's very slow, but definitely it is showing a green last week. So gold is bullish. Now two stocks picks on the weekly. This is Torrent Pharmaceutical. Pharma sector is up. Remember, the momentum is up. The volumes are above moving average. The trend is up. The pattern that you see is an inverted head and shoulder. The target could be the size of this, head. That entire length can go upwards on the weekly, means it can be a big move if it works out. It's already breaking out of the head and shoulder pattern. So there is Torrent Pharmaceutical, and right side the Infosys, which is also from the IT sector, which is clearly bullish, and this is a box pattern or a rectangular pattern, whatever you call it, and it has broken out of that clearly since the last 2 weeks with great momentum and great trend and above moving average volumes, right? So these two were picks for the swing or positional trades for the next week. And another actionable on the index, if you see, is double diagonal counter spread, which is giving a very good range of 16,917, 670 just for 5 days. That's definitely not going to move out of that range. So that's definitely, so it's a confirm, kind of confirmed max profit. The max profit of RiskReward seems to be for probability is 71 is good, and the range is very good. So that is a nifty index play using options. Look at the estimated margin for one lot. The portion size can be based on a capital and risk appetite, but for this risk reward, this capital and this range, this is kind of assured work unless a big breakout happens on the other side. If the big fall is happening, losing 300-400 points downside is unlikely, or a big up move that happens above 17,700, that kind of levels, then you may have to adjust the positions ahead of that by rolling up or rolling it down, right? Otherwise this range seems to be do nothing and then get let the time decay give you the profits kind of strategy, you can say, right? Now just to wrap up markets, what happened last week was just a bounce back confirmation. One bounce had already happened with a hammer and it bounced, and the main thing is the bank nifty supported on Friday last day, picking up the momentum and also the taking away the gap. So that is positive. Market did bounce back well last week. That's what you can see. But view the market from the next week to be cautious bullishness, not really clear bullishness, because of the fact that the bank nifty still has to catch up on the trend, still has to catch up on the moving average overcoming, and then even the both indices has to take away the previous swing high before we can say that no, it is clearly a bullishness that is going to continue, right? So and yeah, so there is some reason, another reason that apart from the momentum and the trend and the price patterns is that the Fyers are reduce the selling probably because of vacation. We'll come to know next week. Right. Bollinger Bands also is indicating that there is some slowdown or a cool off or a sideways move that can be seen from the lower and upper bands. So the main thing that we can do, we have to make a note that this consolidation that you see in the Bollinger Bands, right, or the price action that is not spilling out down or expanding volatility on the downside may last for a long time or it could be a short time. It all depends on whether the swing high, when is it going to be taken out. Swing high is at 17,500 to 7,600 levels for the Nifty, 36,000 and then 37,500. Actually 17,500 and 37,500 is the levels for the, where these levels are breached, then we can definitely say that it is going to hit back the previous all-time highs again. No, until then you never know whether this is consolidation that lasts or whether it is a consolidation that will break down into further correction or not. We never know, but as of now, those are the levels that we would watch out for on weeks ahead. Day weeks definitely within the 15-20 levels cool off. So if you're playing positional, do not go for naked spreads so that no gap ups or quick reversals can take away all your profits and take away the capital loss sometimes. So always go for vertical option spreads with defined strategies on them. Above 20, you have to be very cautious if the VIX goes up towards that. Now, still, you can see that it's now nearly 1,000 points away from the previous all-time high, 18,800 kind of level. So there's still time for some quality stocks which have corrected very good and then slowly picking up. So that's the right time to enter in case we have a horizon of 1 or 2 years horizon for long-term investing. So this is the time to do that whenever the market corrects. So once it has reached again the all-time high, then it may not be wise to pick up the stock. You'll not get it cheap. So that is something you keep in mind. You can right now you can clearly see since the last 3-4 months that the market had been moving up and then it has been correcting and now it is again recovering from the correction. So this is cyclical changes in the very short term that you can observe, and then you have to adjust your strategies according to how the market moves, and then you can reap the benefits. This is something that I will repeat the last 2 paragraphs since the last several weeks. So I'm just repeating it again, right? So that's the view from my side. I hope it helps you to frame your view for trading for the next week, and also helps you to frame your plans. If it helps in some way, then share it to your friends also, and then hit the like button. We have very few subscriptions. I promise that the next year 2022 I'm going to put in more efforts to come out with more quality analysis and more videos on different strategies and algos and cryptos and all of these for the next week. So all I need is more some more subscriptions. So hope you would help out in that, and thanks for watching. Happy trading, happy learning. Bye.